Hi, this is JC Parets with AllStarCharts.com, and today we're taking a look at shares of Chipotle. The first thing that we want to do is go over why the $715 was a key target at the beginning of the year and really throughout the fourth quarter. The last major correction that we had was early last year between March and April, and prices went from over 600 down to under 500 very quickly. So once we got above that level, that gave us $715 as our target based on the 161.8% extension of that entire correction. So that was achieved earlier this year, and since then we've corrected nicely as prices should once upside targets are achieved. Now, something interesting is happening. We've had a very clean downtrend line from those highs in February, and we recently broke out of that over the last week, especially with earnings last night, and we're back to that 715, 716 level. So this is critical resistance. I got to tell you, I do love the fact that we broke above the downtrend line. I like the fact that we got above all of this resistance here. We're going to look at another chart where we're essentially going to classify this as a failed breakout, and I just want to go over this real quick so we could set up our next price targets. This is the exact same chart. Again, here we have highlighted as we hit that price target, it essentially exceeded this real overhead supply, which in my opinion, the fact that it was tested here, failed, tested here, failed, rallied back up again, tested here, failed, and now we're gapping up above this level. This level right under 700, to me, from a more conservative standpoint, seems to be the key overhead supply, and when it comes to setting up our next price targets, we'll chalk this up as a failed breakout and really focus on this $700 level. So if we take the entire extension from the all-time highs after our target was hit to those lows, we get a price target just above $800 based on the 161.8 extension of the entire decline. Now, we like to also be more conservative with our price target. So again, this $700 level that we've been mentioning, let's use that for our measured move target, and we essentially have 100 points. You know, as you can see, this rally here, 100 points. That's what we're looking at. So upon a breakout, 100 points from 700 gives us a target of about $800. So if prices get anywhere near 800 or just above 800, that's where we want to be taking our profits. That's our price target. So at this point, I think we can be long above $700. As mentioned, this was key overhead supply, in my opinion, the most important one. But I think it would be irresponsible of us to ignore the all-time highs that were set earlier this year. As you see, today, after earnings, the market is acknowledging that overhead supply. So again, it would be irresponsible to ignore that. I think we could be long above 700. I would be adding two positions if we're above all of this overhead supply, and only if we're above that overhead supply would I be more aggressive in Chipotle CMG. And again, I would be taking profits anywhere near $800. That's the target. That's how we want to manage risk. And I think that this chart, as messy as it might seem on the surface, is actually pretty clean.